Hello and welcome to our Coffee and Consulting, the first one this year. I wish you still a happy new year. Hope you started well and wish you a wonderful, successful, healthy, and happy year. It's again Coffee and Consulting time, and today's topic is global employee mobility, tax, and social security compliance in 4 steps. We will, as in the last years or in the previous years, actually, we have prepared a couple of slides. We'll go through a bit of it, and then we'll also have the opportunity to answer any kind of questions from your side. So if you have any questions to the topic, then please use the box for questions to ask anything. We will, as long as we have the time for it, we'll answer them as best as possible. In case it will take a bit longer and will actually be too much for the today's session, we will take the opportunity to actually send you an email and reply to you with an answer. Before we start, you are all in listen-only mode, so you will not be able to ask any questions during the session. As said, use the question box. Also take the opportunity to download the slides if you want, so you can keep them for later. Last thing, the today's Coffee and Consulting will be recorded, so we do have the recording as well, and we'll upload that on the YouTube channel. So in case you would like to have a look later on, there you have the possibility to do so. We when we thought about the today's topic, one of the main issues we see in our daily practice is compliance, and tax and social security is one of the biggest steps or one of the bigger hurdles we see when companies would like to send people abroad, either on an assignment basis, on internal local plus transfer policies, trainees, business travelers, whatever. So there are so many different groups of people you have to look at, or situations you have to look at, and it's quite complex in the end. Therefore, we try to actually put it together in kind of 4 steps, so it's not overboarding, to give you a bit guidance in what needs to be done or where you have to look at. I'm sure you have also seen already some of those questionnaires where they check on what companies think is the highest risk in compliance, and the tendency is still that the tax risk will be viewed as the biggest risk in global mobility. In my opinion, however, I think that the social security compliance risk is a bit of a higher one, because the problem you have is, first of all, the employee is not quite understanding if you are not doing everything in regard to social security contributions coverage, what you should as an employer. Whereas if from a tax point of view there will be made a mistake, usually people understand that more or better, because maybe they sometimes even struggle with their own tax returns and therefore understand that it is quite complicated. Also, people see tax as not as that personal as social security coverage, because it also doesn't affect them in the same way. I can provide you an example in regard to social security compliance, where a client of us had to do a turnaround in Thailand, and they found the right person, sent the person to Thailand to do the turnaround. The Thailand entity had at that time had 50 people, and they were thinking about either there needs to be a layoff or they actually will really bring it into the black zone, like profit in the end, so they can really keep the entity as well as maybe even grow. They sent the employee from Switzerland with the family, wife and two little kids to Thailand to take care of it, to try to do the turnaround. He was, after 2 years, very successfully, and because it was such a success, the company said the whole team plus him can go on a canoeing event. They did that. Unfortunately, when he went canoeing, he fell out of it and with his head on a stone. Now, after a few days in hospital, he actually died. And then the wife and the two little kids, I mean, they not really thought about it because they understood every month had been Swiss Social Security contributions deducted, so no problem at all. Coverage should be there, they should receive some benefits, so no problem. However, when the situation arose, then the employer understood that actually the necessary documentation in order to get the employee covered in the Swiss Social Security system has not been filed. Therefore, the last 3 years in which he had been working in Thailand, he actually was not covered at all in Switzerland because the application for the continuation of Swiss Social Security contributions has not been filed. They were trying to find a solution with the Social Security Authority, but they were just like, you had time to do that for 6 months, you didn't do that, so we can't do anything. In the end, the local people, so the Thai employees, saved some money in order for the funeral and everything, and very quickly it was spread, that story, and with the Thai people actually saving some money for the funeral, it was spread through the company. The company in the end decided to help out the wife, make additional payments, trying to kind of make up for it. But the effect it had was that they had to hire 3 additional employees just in answering questions from all the other employees who had been sent out from the company, who were working in complete different locations, and everybody now was then trying to figure out, am I correctly insured? Is everything okay with my situation? They had to go back to check and review everything, and it took them quite a while to get again the trust from the employees in the system, in their way of doing it, in everything. And this is something where I think the risk regarding the wrong coverage in Social Security is really, you have to consider in addition. So it's not just the employee is not covered in the right social security system or has paid too little contributions, whatever. It's also then in addition that everybody else is looking at their own situation and thinking whether that can happen to me. And then you, as an employee, you would like to see proof, which takes time, as well as the internal review then needs to take place. So I think you can understand, you get the picture about that. It is quite a big task in the end, starting with a mistake, and mistakes can happen with in this regard. So that I just thought I would like to share that with you to give you an idea also why, in my opinion, the social security part is, for me at least, a bigger risk in regard to taxes. In case you do it wrong, then usually you just end up with having an additional fine, and that's it usually. But in regard to Social Security, it's a bit of a bigger thing. Then let's start with our slides. So when we were thinking about today's Coffee and Consulting and the topic, we thought we would like to try to compromise it as best as possible, and came up in the end with those 4 steps, which we think are really covering all the different aspects. So the first step is definitely to look and review the global mobility programs, look at the different categories you have, see whether that is correctly covered, put together, as well as seeing in the end as well that whether the specific employee is actually covered under the correct global mobility program. He should be covered. Then also, I think sometimes we spend too little time in making a real assessment of a situation, and that in the end takes a bit of time, but I understand cost is always a bigger issue in global mobility, but to save in the end fines or wrong things, the assessment of the effective situation of an individual is really quite important. Not just only from a tax and social security point of view, but also from an immigration point of view. We're not touching the subject immigration today, but tax and social security is something which is quite important as well. And even if you think all the employees have the same situation if you send them to whatever other country, but it's not. Sometimes they remain still resident in whatever other country. Some are married, some are single. There are then different outcomes from a tax perspective, considering the center of vital interests, also thinking about where someone has their main tax residence is different. So this is something really you need to do case by case. And what we've seen, and my recommendation is really to take the time for it, because then in the end you can determine which tasks you really need to do, what are really the consequences, and then as well do the same thing from a social security point of view. With all the different rules we have, with the whether the bilateral agreement might be to be considered, or the agreement with the EU or whatever, so that we are sure we have the right coverage and we have the right places where we have to pay taxes. In the end, the assessment of tax and social security will come together in the payroll reporting requirements on top. So in the payroll, everything comes together, and there you definitely need to know where taxes have to be paid, as well as where social security contributions have to be paid. And then also looking at what kind of payroll reporting requirements have I as a company or a legal entity. This is something which I think sometimes we are looking at that too little, and there are mistakes which could definitely be avoided. With the assessment and the detailed review of those situations, we will in the end minimize the reviews from the tax authorities, social security authorities, or any kind of audits we might have on an individual, so on an employee level as well as on a corporate level. And therefore, I think that's definitely what our main goal should be. So we could be minimizing also time for that as well. What does the review of global mobility programs means? It means you should review about when you set it up already about strategy targets, looking at the different groups with the different needs, and then maybe not only have one program, but maybe different programs. Instead of programs, you have maybe just one program, but different policies or guidelines. And then also to kind of minimize the number of different agreements and contracts, and kind of the more transfers, the more assignees, the more international travelers you have, to try to minimize any kind of exceptions. If you try to do that, then you actually make your life much easier, because you will, in any kind of negotiations with the employees, you can say, this is our guideline, this is our policy, these are our rules. If we do everything according to them, so even if I personally would like to say yes to that, but we can't, because that everybody should be treated the same way. As soon as you start to make exceptions, then you will have a harder time to tell someone no for whatever they are asking. Try to kind of streamline it and see how to put together a good process where everybody is online on the subject, as well as can really be implemented well in the daily practice. If we look at tax and social security compliance, then, and I said, a good and detailed assessment should be done for each case. This includes the home and host country tax filing requirements. Looking at a situation, if you send, for example, someone from Switzerland to the US, he is single, he is getting deregistered here, going to the US for 3 years, and then coming back to Switzerland again. The assignment starts on the 1st of January. Then basically, you know that in Switzerland for 25, there should be no tax return filing requirement unless he has some personal, some private properties or anything else which might trigger a tax return filing. But in principle, because he is moving, he is single, 1st of January, the assignment starts, and he is present starting from that day in the US. There should be nothing in Switzerland. There would be only tax return filings, most likely in the US. Now, if the employee will not start as of 1st of January, for example, but on the 1st of April, then okay, for the first 3 months, maybe, not maybe, but for the first 3 months, there's definitely a Swiss tax return filing on top. Or in case the situation changes and he is married, the family still remains in Switzerland, then you also know there is a home country tax filing requirement, meaning in Switzerland there is a need to file a tax return. So that's what I meant earlier, whereas that even situations might look quite similar, in the end they are not similar. Tax support is something which we usually really recommend to consider. If you send employees abroad, then it is quite helpful in order to meet the compliance level that you give the employee some support in it. Now, definitely as an employer, you can't do that yourself, so you provide them with either here is the tax consultant you actually should use, or you say you can choose whoever you want and we just pay for it. It is and that is now based on my experience, sometimes not that easy to find the right person, also who has the right understanding from an international perspective. Therefore, it might be quite helpful if, as an employer, you inform your employee and say, we usually work with that tax company. That's the one you actually should also use, and then arrange with the company the rates and everything yourself. Because only someone who has a good understanding about it is able to use the double tax treaties in the right way and is able to see that there is no double taxation at all. Tax equalization is something you should look in your company how you have phrased it to see that everybody is actually understanding the same and understanding that how it works, because we see sometimes that either information is missing, or if you talk to 2 or 3 different people, they have all a different understanding about it. So the the simple, if you put it in a simple way so that everybody understands it, and then try to really also think about all the different scenarios, that is quite helpful. I think stock options, so any kind of employee equity and so on, that is something which is a different topic and definitely needs some tax planning or some support in that regard. In regard to Social Security, it is actually the same things you need to think about. So the assessment would provide you with the information in which country someone is subject to Social Security, also looking about the coverage itself. In case we take the situation with the assignment to Thailand, now there is no Social Security treaty with Thailand, so yes, there might be the possibility to have someone voluntarily continuing the Swiss Social Security, but maybe the level, because in regard to certain areas, you might need to find something else. Or in case the continuation is not possible at all, then you need to find different um, insurance coverage for the employee, because definitely if the individual then will only be subject to Thailand social security contributions, the coverage is definitely not at the same level as the Swiss one. The formalities around it is something which I think is, at least in Switzerland, you have now the possibility to get everything kind of online through Alps, where you can get it quite easily and quickly. In other countries, they start as well the process to do it a bit more digital. So I think there we see that that will help in that regard as well. Reviewing exemption possibilities and looking as well whether additional insurance needs to be taken out. That is something also you need to do case by case. You can kind of have certain guideline in an expat policy, But in the end, that is then really getting down person by person what the situation is. Also to check on the coordination between the social security contributions and the benefits so that the assignee knows exactly what he is paying for as well as what he most likely will get. I mean, sometimes it is a bit more difficult to calculate the benefits, at least if we talk about retirement benefits or disability and benefits or something like this. If we just talk about how many days someone can have sick leave or accident leave, then that is something else. Also, I think it is depending on the countries you have to send your people to, might be a good idea to look at international health insurance coverage or international or global insurance products. Also, the international pension fund is something which I think is quite a useful product if you have people sent to countries where there's no social security treaty in place, and then have a good coverage. So if you take an international pension plan, you can kind of copy your own pension plan to the international pension plan, and then have also a good coverage for those employees. Tracking tools, processes, I think that is quite key in order to be compliant, or the trying to be 100 or the most 100% compliant. Payroll reporting requirements, that is our step 3. So you would have to look at whether there are any kind of withholding requirements in whatever country you are. If we take the example earlier about someone being sent to the US, so even if you have no legal entity in the US, the employee is working maybe on a client side, you pay from out of Switzerland still the salary. You will have a payroll withholding requirement in the US because the employee is working in the US. So in other countries, we have similar situations. So you need to check beforehand whether, as an employer, you are required to do something. If you don't do that, and there had been some requirements, sometimes you just get a fine, sometimes the consequences are a bit more negative. So it's worthwhile to check that upfront. Also, the assessment about expenses, reimbursements, or payments to the assignee, because in the end they have some tax or social security consequences, and it should be looked at it carefully. The point about assessment of employer contribution means that in some countries you may end up to have to pay taxes for the employer contributions. Like if you send someone again to the US, and as a Swiss company, you have the employee enrolled in the pension fund in Switzerland. As an employer, you pay 50% of the contributions. So the employer part will actually be taxed in the US. So in the US, that is a taxable benefit. There are a couple of exceptions, but you need to consider that as well in your cost analysis you may have done in the beginning. Also, from a payroll perspective, you would have to include that then on a monthly basis in the payroll. Gross-up calculations is something which we see in practice are that the different payroll tools there are, it's not that easy, at least not that easy if you have to combine, for example, Swiss Social Security and US taxation. So contributions and taxes from different countries, some of the payroll tools are definitely not able to do that. Salary certificates and reporting periods from a tax point of view is something which in the end everything comes together. So the salary certificate or the final document to confirm what the employee has received on an annual basis in now the country he or she had been working in that country. They definitely need maybe something for filing the tax return. If somebody still is resident in their home country and need to file a tax return there as well. So for that reason, you might have to have a salary certificate on top of it. So you have to look at, again, at the individual circumstances and situation, and based on that, you can then determine which is the best way. If you try to put everything in place and to streamline your processes, try to do that. Try to do really an assessment upfront, so you do the right things. Have a very well detailed documentation about everything. Then you minimize the amount it takes for external reviews, minimize external reviews at all. And to the documentation, it's not just then about the salary, bonus, and whatever. It's also about expenses, reimbursements, the pay slips from the home country and the host country have to be put in together, so that in case there's an audit, you can show both. You also need to show where was the shadow payroll, where was the payroll where the salary had been paid out, so that the authority in the end needs, or whoever is doing the audit understands the situation. Employment contract, assignment letters, also there check that in the end the individual might not be able to claim twice the for something some reimbursements, so that it's really well drafted and clear for anybody who is reading it. Also the documentation of the charging of cost to maybe the host country or home country, whatever. See that you are very well documented, so that everybody is again clearly can see what the situation is. A1 certificates and certificate of coverage certificates, in principle, they should be already in place as of day one. Now, from a Swiss perspective, we can also request them retroactively. Now, in other countries, unfortunately, we are not in the same situation. Sometimes there we can't request that retroactively, so we do have to get that really from day one. Also, depending on which situation you have and in which country you send your employee, you might, or the host country might request that the A1 or certificate of coverage is really in place from the first day onwards. So start that process quite quickly. And then to sum up and add some additional aspects to it, in practice, we see sometimes that companies try to structure an assignment based on tax optimization, being efficient from a tax point of view, but then one of the consequences can be that the administration for the whole structure and the whole assignment might be then just a bit overwhelming. As well as what you also have to consider is, if you try to maybe also do a favor for one of the employees to try to optimize it as best as possible. Keep in mind you have also a couple of other assignees, and if you do that for every person, that might just be a bit overboarding. Also, in the end, that you need to administer everything, and if everybody has different rules, the administration will be just then again too much. Also looking at where do I need external support, what can I do in the company internally, see where to do what, and how to get the best outcome. I can just say from a payroll perspective, if you have someone assigned to another country and there is the home country payroll as well as the host country payroll involved, a very, very good communication between both payrolls and very well organized coordination between both countries is the trigger to be successful and to be compliant. Because otherwise, if that is not working, it's unfortunately in the end resulting in non-compliance because both countries don't know anything about the other one, and that's quite hard. Setup for the payroll usually takes also a bit of time, a bit longer. So if you think about, even you had maybe 20 people already sent to the US from Switzerland, usually it takes 1 or 2 months to actually get everything on track. So also from an expectation management point of view, inform your employee or your assignee about it, as well as maybe take the stress out of it, to say everything needs to be done already perfectly starting from the first month, which is usually not the case. In the global mobility world, there's a lot at the moment ongoing in tools, different tools, lots of providers bringing out their own tracking tools, administration tools. That is definitely something which we will see, that we have to look at them, review them, and then make a decision whether that is something for yourself. Look at those because in the end, it is something also helping to track and to be compliant or more compliant in that regard. Data protection is a huge topic also in regard to compliance. Always keeping in mind that different countries have different rules you need to look at. And then in regard to compliance as well, the matter about risk appetite, depending on different companies, they have different risk appetite also in different areas. So keep that in mind as well. And if your target is to be 100% compliant in global mobility, then I wish you luck with that. But from an expectation management point of view, I can tell you after now almost 25 years in that, working in that area, I haven't seen any company who was able to be 100% compliant. I think if you try to get 90% compliance, then you are already very, very good, because it also every day changes something. You have to keep track on all the regulations and which is not that easy. And also keeping in mind that we as human beings have, I think, changed a bit. We do want flexibility, and therefore people just make their decision on their own, or make a decision whether they're working now from the office or from home, or go and meet that client or whatever. So I think if I look back 25 years ago, then everything, if you had to go on a business trip or whatever, it had to be approved at least from your superior. Today, it's I think a bit different, and most likely in your companies as well. With this, I close for today and would like just to draw your attention to our Swiss Global Mobility Conference. There are still a few spots available. It will be a great 2 days event. So if you want to have a look, then just go on our website, or you can also get back to me, and I definitely will provide you with more information to it. And then our next Coffee and Consulting event will be on the 3rd of February. And the next webinar will be on the 25th of February. So hopefully we will see us again then. We definitely would be happy to meet you then. For now, it's just I wish you a wonderful day, a wonderful week, and hope to see you at one of our next events soon. Thank you for your attention today.